Hey folks, Dan Frio here with your opening bell for September 19th, 2025. So this might be a pretty short video because we have really no economic news out today. So what I want to do is just do a really short recap because today at 1 o'clock, what I'm going to do is I'm going to come in and recast what happened this week and the whys behind it. And then I'm going to recast to next week what economic news is coming down the pike that should be affecting these. Because this week, right before the Federal Reserve met, the rate was 6.1. Now we're at 6.3, so the rates are up 0.25% since the Federal Reserve cut. Why? Well, let's get over and figure that out, folks. So here's what we have in the economic news for today. Nothing. I try to do the 1 star just to giving you the most important data, and there's really nothing. The data we got out this week was retail sales, which was pretty darn good. The Federal Reserve cut just like we had thought, and the jobs numbers came in yesterday, and they weren't as bad as expected. So I'll do a recast of all this at 1 o'clock today. But let's get over to see what the markets are looking at. The markets are looking at right now why there was such differences in this Federal Reserve meeting. So let's break that down. You probably know. We have Lisa Cook. She's a Federal Reserve official that President Trump's trying to fire. So you know she's going to probably be a little ticked off at this meeting, but she had the ability to vote. Then also on Monday night, the president was able to get another member of the Federal Reserve approved through the Senate at the last minute Monday night, so he was able to vote Tuesday and Wednesday for this meeting. So I'm going to show you the dot plot. Here was the outliners in this thing. We focus in on is the markets we're focusing in on the dot plot. So members of the Federal Reserve have the ability to put a dot where they think the federal funds rate will be this year, next year, and following years. I really don't care about next year, maybe next year earlier, but we want to focus in on this year, 2025. So right down through here, here's the dot plot for 2025. Well, here's the dilemma. The Federal Reserve cut rates, and we're right here right now. So if you go across here, the federal funds rate right now is between 4 and 4.25. So we're right in this bubble right through here. And that's where a lot of people voted. We had one dissenter up here saying no rate cuts. That might have been Lisa Cook, not sure. Then we had another person saying there should be 5 cuts. And we know this is the person that President Trump just assigned or got appointed to the Fed on Monday. So most of the people are right through here. So here's the dilemma right now. They're saying, a lot of people are saying, well, we don't need any further rate cuts. Well, the ones that voted for the rate cuts are saying, well, we got to do something about the jobs market because it's really deteriorating. And I watched an interview this morning with Kashkarian. He's also a Fed official, and he's saying, and he's giving us a projection of this, he's saying the housing numbers are 40% of the inflation numbers, and they are back to pre-pandemic levels, which is fantastic news. So he's like, we're the headline numbers are saying, inflation is up, but once the housing numbers really start to filter into these numbers, he even admitted that the numbers are going to come down. So I think the Federal Reserve has the most weight on the jobs report. So then we got a jobs report yesterday that was a little bit better than usual. And now the markets are saying, well, maybe they're not going to cut, and these people will move their votes up to here because the reason they were voting for additional cuts was the jobs market. So we're going to pay close attention to this and all the other financial news that comes in. But let's get over and see how the markets are doing right now. So the Dow Jones just opened up, and we are up 10, and 76. So the broad markets are doing pretty good this morning. Oil's down, which we love. In the U.S. Treasury right through here, this is the bond, the U.S. 10-year Treasury. This is the bond that they thought was going to go up to about 5%. Well, the other day when the Federal Reserve was meeting, this teetered at 3.99%. They're like, okay, if this can stay below 4%, that's a threshold where mortgage rates and interest rates in general will start to move down. Well, the problem was it couldn't stick at 4% when it closed above 4%. And now it's rallying from there. Some analysts at CNBC and other analysts think this might go back to 4.2 or 4.25. So this went from 3.99 or 4 to 4.11. What happened to mortgage rates? Well, they went from 6.2 to 6.33. So now what they're saying, well, if this number could go, where did we go? If the number could go to 4.25 or 4.3, that means it's going to go up another eighth. That other eighth would put you right at 6.5%, where I've been predicting for Q3 of this year. So I'm thinking we should be around 6.25 and 6.5, as long as the data keeps coming in, kind of a benign data to satisfy the markets. If the markets are starting to look at jobs reports coming in better than expected, and then you see that's going to be the catalyst, because the Fed's looking at inflation being sticky. going up because of tariffs, but coming down because of the housing numbers. So they're like, okay, that number is going to be a little bit flat, not hugely volatile. Their most focus now is on the jobs number. So let's pay attention to that part of the equation. So let's get over to see what the bond market's doing right now. It is zero. This was down about 15 points earlier. So the good news about this is, as this coming up, we're hitting a 0 or -1. Mortgage rates aren't going to change. Here's what happened this week. So I know we went over this the other day, but when the bond market, if you're new to my channel, we focus in on right through here because we don't follow the 10-year Treasury. You follow that only if you have to, but we need to follow the mortgage-backed security bond. Here's what happened throughout the week. Throughout the week, mortgage rates eased a little bit more and more and more, and we got to about 6.1. And then what happened was, where do we go? We go down through here, and it stabilized right through here. And then we went in, everybody was holding steady for the Federal Reserve to meet. And then the Federal Reserve met. What happened? They came out at 1 o'clock with their announcement. Boom, this jumped all the way up to this point because they were like, okay, the Federal Reserve cut. Now we want to see if it's hawkish or dovish. Well, it was hawkish, and I'll explain all this in my live event. What happened there? MBS's dropped. What happens when mortgage bonds drop in price? Rates go up. So that pushed rates up 0.25% from where they were on Wednesday. So where were they going to go from here? That's what we're trying to figure out. So pay attention to the jobs market, and that's basically what the Federal Reserve's watching. Here's what the Federal Reserve watches and what they control. They control this number right through here, and this is wrong. And it's actually on, I think this is on the federalreserve.gov website. They still haven't updated this to 4 to 4.25. Go figure. And here's the numbers that they look at. But here's what we're looking at over here. I want to see what the Federal Reserve, now we're going to focus in on this every day, just for kicks at the last minute. In 40 days, the Fed's going to meet. What are they going to do? Well, let's just monitor this. Last time, right after the Fed meeting, the probability was about 95%. Then as they got more and more numbers in it, it came down and down and down. Kind of the same thing happening this time. So what they're saying is that the next meeting in October 29th, the federal funds rate will be moved down to 3.75 because we're at 4 right now. So that's 91% chance that's going to happen. And then they're also triggering another rate cut in December. So there's an 80% chance of this. So we're going to focus in on this each day. And if those projections come in, which you have to understand, if these projections come in, a lot of that data is already built into these folks. So you need something that kind of is an outliner. So that's what we're trying to focus in on a daily basis. That's why we focus on the economic calendar. So let's get over to the earnings reports. Now, you guys might want to ask, why am I not doing the earnings reports at the end of each video? Am I trying to hide something? No, there are really not many earnings reports coming out. So yesterday we had, is this GE? GE came out, or GIS, General Mills, I'm sorry, came out with earnings reports on the earnings per share. It beat, and on the revenue, it beat expectations by 0.1 and so forth. And then yesterday, what did we get? We got, not very good news here. FedEx was the only one that did well out of the 3 people that posted. Lennar was one of them, Lennar Homes. I don't think they're going to do very well. Same things with earnings and the revenue. This morning, there is nobody posting earnings. So that's why I don't really go over the earnings reports, folks. So that is my report for today. Here's what I want to promise you. We're going to be back at 1 o'clock today. What I'm going to do is recap all this so you guys can understand what happened. Then we're going to go to the economic calendar for next week. Is there something out there that can be changing these things? Well, that's what we're going to focus in on 1 o'clock live. If you're not able to watch it, please watch it over the weekends. And folks, we're about 39,000 subscribers right now. We need 1,000 subscribers to get to 40,000. Can you help me out, please? If you haven't subscribed, please click the button over there. Help me out. Get to 40,000, then I'll quit begging. But other than that, folks, have a fantastic day. I'll be back at 1 o'clock for my closing bell video for the week and forecasting what's going to happen next week. Folks, who am I? Well, my name is Dan Frio. I have a slogan. It's one application, one credit pool, and we're going to compare your loan to over 30 different lenders. How do we do that? Well, I am a federally licensed mortgage loan officer. How? I work at a bank that provides me a federal license through all 50 states as well as Puerto Rico. But the unique thing about us here is we have a slogan. One application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do it? Well, we're set up with over 30 lenders. And the reason why we did this is me and a lot of my colleagues came from the broker environment. We're like, bank, we need a lot of options for our clients. So they heeded it. They went out there and they found and signed up all the lenders that we required them to sign up because this gives you the best options when you're out there looking to buy or refinance. So here's what we do. You put in your application. We'll get you approved, and you'll work with me or Alan. And then what we're going to do is once you get a house under contract, or if you're looking to refinance, we're going to look at locking your rate. But the nice thing is we're going to look at our rates, Then we're also going to look at all the 30 other lenders that we work with to see if they have a better rate, better terms. Maybe they even have a program like this. Are you looking to buy a house and you need some down payment assistance? This will give you up to $7,000. The good thing about this is you don't have to pay it back. There's no lien, there's no payments. And then when you go to refinance, you don't have to worry about another lien to refinance with, because this thing is no lien on your property. It's basically like free money. And if you're out there looking to refinance and you really don't know what rate to hit, well, click right through here. So here's what will happen is, once we get you approved, then we're going to scan the whole country, over 30 different lenders. Who has a better rate than we do here at the bank? I can use them. So that's what we provide you guys with one application, one credit pool. We're going to compare to over 30 different lenders. Check out our website if you want to find out a little bit more about how it works. Give us a call at the top over there, or just ask Dan a question right through here, and I'll be the one responding to you personally. So put in your phone number, make sure you have your email address in there, and I'll be responding back to you with any question that you have. So that's it for this morning. Really nothing going on in the markets. We have the MBSs flat as a pancake. We have the markets, I'm going to say that's almost flat as a pancake as well. So not a bad day to trickle into the weekend. So thanks for watching, folks. God bless. Be safe out there, and I'll see you at 1 o'clock for our live event to figure out where these are going to go next week. Take care, folks. See you then. Bye-bye.